Hi everybody, it's Christian from Serene Education with the 4 major news update for the 20th of February 2013. Hi everybody. Okay, I'm just going to go over the 4 majors as per usual. I'm going to go over the 4 larger time frames, and I'll start with the Euro-US dollar this morning. Let's have a look and see what happened last week. Quite clearly you can see that we had the week prior to that a bearish engulfing candle, and last week in particular we had price trading into using that support, that near-term support here at 13,500, price moving higher and failing at the institution moving average. Long term, we would like to see the pair trading above the institution moving average. Here at 13,500, that would have indicated that we're trading above a major resistance level near term, and we could have looked at to take profit at the next level, roughly around the 13,800 mark, and then back up towards these areas here at 14,500. However, that failed to materialize as price broke lower 2 weeks ago, and last week in particular, failing at its attempt to try and find support and to rally any positiveness from 13,500 on. And what we had was this indecision candle with more action at the bottom of the candle after a bearish engulfing candle, which didn't bode well. However, as long as it maintained above 1335, which happened to be prior resistance, there's always likely to be a support. And sure enough, what we're seeing this week is price finding support on our daily. Near term, I told you we like 13,300, 13,3500. Clearly a consolidation area, and you can see prices now been using that over the past couple of weeks. So as long as it maintains above this area here, there's always going to be a chance for price to move back up. Ideally back up towards this prior consolidation here, which is at 1345, which is not too far from where it is now. However, back up towards 13,500 would be the likely target, as long as it maintains above 13,3500 or above this consolidative range. And if we can do that, get above 13,500 long term, we should be heading towards the highs that we've seen recently this year at 13,700 and all the way up towards that 14,500 mark to the top side. All your intraday traders, you can see that positiveness on the small time frames, my 4 hour in particular. You can see 1335 primarily being a support here. A lot of hesitation at this area here, a number of days just finding support. However, at the underside of the institution moving average, it was imperative that price actually found momentum and needs to get above the institution moving average in order to be positive, and also above the intermediate swing, which is low at this moment. So very, very important to be patient. We are getting momentum. Again, last close above the 4 hour institution moving average here, and then clearly target the upside here at 13,500 is your first target. Next up is sterling. Let's have a look and see what's happened on the weekly. Last week, a huge engulfing bearish candle at the underside of the institution. We've had a lot of negative momentum for sterling against US dollar in recent months, and sure enough, you can see quite clearly since the start of January of this year, price has been very, very negative indeed, and falling quite drastically to the downside over a short space of time. Our weekly time frame is looking very negative at the moment now, and the long-term goal for this particular pair would be these areas down here at 15,300, a major support and resistance level over a number of years. Clearly a consolidation area here at 15,300, so that'll be our target long term. Near term, however, you can see price is testing or the current support, a near term support here just below the 15,500 mark. So on our daily, you can clearly see I've marked that area in. You can see quite clearly back in June, July, August of last year, a lot of hesitation around this area as we head towards that 15,300. But you can see that our template, everything's looking positive for further shorting opportunities for this particular pair. So it's just waiting patiently for the breakout. You can see it's been moving, breakout, shallow moves. So a nice close below, ideally the 1542-41 area, and look to target that 15,300 mark long term to the downside. So 4 hour candle, you can quite clearly see lower swings depicts downside movements. Quite clearly there's more red on my histogram than blue, so it's telling me it's negative. The institution moving average is well above price, so shorting opportunities should be the only thing that should be on the cards. And you can quite clearly see a couple of days ago, yesterday in particular, we had a nice bearish engulfing breakout, and now we've seen consolidation. So price as it head towards that all important 15,300 mark, consolidation is key. It's moving tentatively to the downside, and that consolidation will continue to occur as the momentum reaches, or as we head towards that 15,300 mark below us. So be aware if you are taking any trades to the downside to take your profits when they present themselves, because clearly you can see market sentiment is now starting to fade on this as we head into a major support and resistance level below us. On to US dollar Swiss franc. Here's the weekly of this particular chart. You can quite clearly see that price since July of last year has been pulling back and moving away from that institution moving average and clearly being capped by the institution moving average near term. So, on the long-term target. So the fib low here in August of 2011 to the current high that we saw July of last year, 2012. You can see that 23.6 has been a major sticking point for this particular pair, as often helping as support and near-term acting as a resistance level. And as long as it maintains below the 23.6 and the 93 mark here, and you'll notice that the swing lows are getting lower, and you can see primarily there's more red above than blue, and all the moving averages above price. 93 should be your intraday resistance level. So going into your 4-hour chart, etc., like that, you should look to see or to keep 9300 above price. Now you can see quite clearly. Near term, we've seen a bit of a bounce to the upside. That's failed to really materialize, as you can see quite clearly. Near term here, price has actually broken that. So swing high, swing high, swing high, failure break. It was trading above the institution for a while, which is good sentiment. However, not really taking that momentum and driving with it into the 93.30 mark, but pulling back. So it's imperative this is to be positive. It needs to be getting above these areas here, especially above the institution moving average, to confirm that sentiment is still looking positive, still wanting to attempt 9300. The failure here, a nice bearish engulfing candle failure here at the institution, would indicate that price is no longer interested in moving higher, and therefore it will target the downside prior consolidation areas. So back here at the 916 would be a good start, back towards 910, and ultimately back down towards these areas here, heading towards that 902 mark, which is our current low that we've seen this year. Last pair of the day, the US dollar Japanese yen. Let's have a look at the weekly. This particular pair, yen across the yen has been very, very, very positive. Yen has really lost a lot of momentum since August of last year, October, November, December. Very large moves to the upside, and all pairs trading against the yen. And clear enough, you can quite clearly see here. What I've done is I've taken the all-time high for this particular pair near term here, 2007, to the lows here in 2011, and you can clearly see the 23.6 Fib retracement area was a nice target for it here going into the end of last year. January, beautiful move to the upside over that month, heading towards, and this month clearly heading into the 38.2 and clearly finding resistance. So 9400, clearly a resistance level near term, and I've got to put those areas in. So there's my 38.2 at 9400 and my 23.6 at 87, and you can quite clearly see since early February till where price is trading right now, you can clearly see that price has hesitated at this area at 9400. So very much a resistance area. Price needs to get above all this in order to be looking positive long term. The longer it spends time below 9400, the more likely the price is going to pull back, and the pullback is going to be a lot greater. So very important we get above this area here as soon as possible. So what you can do, bearish engulfing candle yesterday. Today you can see negativity still playing out on the Asian session going into the European session open. So as it stands now, we should be looking for consolidation with roughly around the prior lows here. If you wanted to look at that, roughly just under the 9300 mark would be a nice target to the downside. Quite close, quite an aggressive pullback trade, but or back towards the 20 period moving average. As you can quite clearly see, the 20 period moving average acting as a nice support for this particular pair. So giving you a gauge, you could use the 20 period moving average as a nice resistance level, a target towards that support. But be aware, if you are trading against trend sentiment, i.e. in this case it's up, so if any pullbacks you're trading, please be aggressive with your entries and your stops. You want to capitalize on any short movements, but you want to be profitable. Just be aware of your risk on the table. There's a lot more risk trading against market sentiment. Just be aware on how to trade that sentiment move. Okay, so at the moment now, you're looking at roughly just under 9300 or 93 as your first target. It's quite close. I'd rather wait, be patient, get a break, nice bearish engulfing candle below this 93, 92.50 mark, and then look to take further, more cleaner air trades down towards this 90.50, which will happen to be the prior consolidation, which will take you back towards roughly the 50 pair moving average on the daily, and then back close below that area would look towards that 88, back towards that 87 mark, which happens to be our long-term 23.6 Fib retracement area. So be careful when you're trading against market trend. You've got to be very, very aggressive with your management, your money management, and take your profits when they present themselves. Otherwise, that's it for today, guys. I hope you have a fantastic trading day. Just look at your news. We've got some news out today, quite a lot of news. Not a hell of a lot of very important news, but nonetheless, it's still important in terms of how they reflect on the currency pairs. A lot for sterling this morning. In particular, we've got the MPC meetings, minute meetings. We have unemployment rates with sterling, Claremont count change. Then we go into the Eurozone. We have the German 10-year bond auction. That's tentative, so that can happen anytime. Probably come out late this morning. Then this afternoon, going to the US session, we have building permits. Very important. The more building permits that have been approved, that means there's more money out there. More mortgages would be approved. That means housing starts would be up, etc. If that figure comes out negative, that means there's less money out there circulating, which is not good for GDP. Well, not good for obviously growth. So very, very important to just keep an eye on those. Otherwise, have a fantastic trading day. I'll see you first thing tomorrow morning. Until then, trade serene.